Hey everyone, and welcome back to EV and Markets Now. Today we're diving deep into Tesla's wild ride, looking at its stock performance right now and tracing its journey all the way from 2024 to today. If you enjoy these market updates, please do me a favor and hit that like button, share this video, and of course subscribe for more. So what's the latest with Tesla? The stock is currently trading around $435 in pre-market action. This follows a modest bump after Tesla unveiled more affordable standard versions of its Model 3 and Model Y, starting at roughly $37,000 and $39,990 respectively. Interestingly, that news initially triggered some volatility. The stock actually fell about 4 to 5% at first, as some investors reacted to the stripped-down specs of these new models. Now, all eyes are on whether these lower-cost cars will significantly boost sales volume and if Tesla can maintain its profit margins in the process. Now, let's rewind the clock a bit. The year 2024 was a strange one for Tesla. For the first time in years, its global vehicle deliveries actually declined, dropping about 1% year over year, even with a strong finish in the fourth quarter. But despite that dip in sales volume, the stock itself ended 2024 on a high note. Why? A ton of optimism fueled by Elon Musk's vision for AI integration, robotics, and his ambitious roadmap for the future. Fast forward to early 2025, and Tesla started facing some serious headwinds. We're talking increased competition, weakness in key regional markets like Europe and China, and pressure after the federal EV tax credit expired. In the third quarter of 2025, Tesla delivered around 497,000 vehicles, which was a respectable 7.4% increase over the same quarter the previous year. This was partly driven by a rush of buyers trying to get in before that tax credit disappeared for good. Still, challenges remain, especially in overseas markets where sales have dropped significantly. On the stock side, technical analysis suggests Tesla might be forming a new base with a potential buy point near 367s. Big institutional players, like Cathie Wood, have also been adding to their positions. So, what can we learn from all this? Tesla's journey shows that innovation and a compelling future vision, like AI and robotics, can keep investors excited, even when the core auto business is under pressure. But it also highlights that profit margins and execution risk are crucial. Launching lower-cost models is a balancing act between gaining volume and maintaining profitability. It also shows that international exposure is a double-edged sword. When global demand slows, those markets can drag down the entire company. And finally, institutional interest and technical chart patterns can influence a stock's momentum just as much as the fundamental business numbers. Looking ahead, what should we be watching? The big question is whether these new standard models will gain traction or if customers will be disappointed by the features and range. We'll need to watch the Q4 delivery numbers closely and see how much the price cuts impact margins. Keep a close eye on regional trends in China and Europe. Those are the key battlegrounds. It will also be fascinating to see how much investment capital flows into Tesla based on the AI and robotics narrative versus its pure-play auto competitors. And as always, broader macro themes like interest rates and supply chain issues will continue to influence Tesla's path. That's your Tesla update for today and its journey since 2024. If you found value in this breakdown, give it a thumbs up, share it with a friend, and click subscribe for more EV and market insights. Just a quick reminder, this video is for informational purposes only and is not financial advice. Always do your own research or consult with a professional before investing. Thanks for watching, and I'll see you in the next update.